Perfect. I can hear myself. It's awesome. That's awesome. I can move that over just a wee bit. Alright. Welcome everyone, and to those that will watch after. Talking finances, having a good Macallan is always fun and enjoyable. I'm gonna drop on the Discord so that the group knows that we're live. Perfect. Yeah, kitty, I get it, buddy. I do get it. I promise you. Don't say that, Tonka, come here. Alright, guys. I think I've put it out there. We got the 12-year double malt. I got a chance to try a lot of good stuff this weekend, which was super fun. I'm glad I did. I'm glad I could. Alright. Here we go. Alright, we're all set up here. Alright, so I want to talk about kind of like the last week I've been a little MIA. I've been in Vegas and I've been having some fun out there. My wife went to the We Are Young festival with some of her family. I did a lot of gambling videos and for the Slots to Be Frank channel, and so that's awesome. I think I got a total of about 10 videos, and since we're switching back to daily content, that's awesome. There's many ways to invest in this world. One of them obviously is to have your own business outside of just investing in the stock market like we're going to talk about today. But last week Monday I've been keeping to the goal, so right now I just want to talk about where we're at as of today. So I've been committing to the $2,000 a week investing, and I do that every single Monday, and I do have my shopping list created as well that we'll talk about here. But let's just talk about where everything is and rediscuss my strategy. So right now I've got what I call in 3 cuts. Cut number 1 is going to be this top section. Those are going to be like the S&P 500, a dividend index, international fund, and then the growth fund as well. And then I've got only one bond index ETF that I invest in, and then I make sure that I invest in all 9 sectors. Now you're probably like, why do all of this? I don't know. It's a goal. It's fun for me. It gives me something to look forward to every week. Like, you might be like, just invest $2,000 in VU every single week, which is this top one that's actually VU. The reason I don't do that is because that's not fun for me. It's not motivating. I don't want to do that. It probably wouldn't make that big of a difference to invest in the rest, but it gives it a little exciting. It gives us something to talk about, like what is actually happening this week, and go through that that way. So let's talk a little bit about where we're at. So in the other index fund section, I've got a total of $1,377 in that pool, and I don't know if it's too small for you guys to see or not, but my goal is to have 27.5% of the portfolio inside of there, and I am about $300 over the goal for the 4,000. For the bonds, I've got about 150 bucks in there. The goal is to have 5%, and that means I'm short by about $52. And then from a sector basis, I want to have 7.5% in each sector to a total of 67.5%, which means I am actually short $233 in the sectors. So as I think about what am I going to invest in this week and what's my goal, that would mean what I'm going to be looking for is trying to get these negatives that exist in these buckets here into a positive state. Anywho, so now, as you think about those type of investment items that I'm looking at, I started the shopping list over here because I've got the 2000 ready to go for Monday morning, which I'm super pumped about because this will make it $6,000 next week, and we're gonna just keep funneling into the investment strategy. Now, what does this mean? This is where my shopping list is, where I'm looking. So because I had a negative in the dividend index, I wanted to drop one share into there at $131. That's VYM. International, because I'm short 15 bucks, I'm going to put another share in there that's $60. Because the growth index is in a positive state, I am actually not going to buy anything of the growth or the S&P because both the S&P and growth index funds are already above my portfolio wish list, if you will. The bond index is below by 52 bucks to the goal, which means I'm going to buy one bond index. Communications is short 154, which means I'm going to buy one of those. That's 144. That will get me closer to in line with expectations. Consumer discretionary, that's actually above the wish list of 7.5%, so I won't buy anything there. Energy is 172 below the wish list, so I'm going to buy 2 shares for $252. Mind you, these dollars over here on the right is as of the download today after close. So if one of these sectors go on a little run, I might have to revisit and determine if we're still good with what the shopping list total gets to. Financial. So financial is at 115 a share right now. I'm 68 behind the goal, which means I'm actually going to buy 2 shares for $230. And I want to come back and touch on this one for a brief second at the end. Healthcare sector below 21, so I'm going to buy a share in there for $277. Industrials short $31 to the goal, so I will buy one more for $267. And then real estate, I am short $7 to the goal, so I will buy 2 shares of that. Again, I want to come back and talk about this one for $200. Technology is over by $300, so I'm not going to invest any in that. So you'll see a 0 on my wish list or buy list. And then from a utilities perspective, I am short $121. It's at 176 bucks per share, and I've got that listed at 2 to get me to $353. Now, I highlighted 3 of them for you because I just want to show you something. When I was looking at this originally, and I was doing 1, 1, and 1, I was at 1,600 bucks. Now, all these 3 ones and yellows, my conclusion on it is you'll notice right over here in the left, this column is my dividend percent. So when I look at this, if I've got extra cash, I do focus on the dividend percent. I do care to have a very strong quarterly dividend. That is one of the goals of why I'm investing, is to create consistent, never-ending cash flow. And so in order to do that, you really need to get your dividends nice and strong. So, now, when I look at this, the financial is at 1.8, and since I'm already investing 2 in the energy line here, I didn't want to make that 3, so that's why I went with the financial line. And then on the real estate, it's actually at 3.7% dividend yield, so that was kind of a no-brainer. I really love the real estate one. I always have. I've been a sucker for REITs forever. And then from a utilities basis, that's at 2.9%. And so if I take that and I change that to a 2, it just got me close enough to 2,000. There's no rhyme or reason to which one of these and why I go over, because when I buy this for 353, the sector or my goal here says I only need 121 to get back in line with expectations of my goal. Well, I'm gonna go way the hell over with 353, and that's totally okay. That means I probably won't buy in the following week, in November. I probably won't buy a utility stock, but this is where I'm at as of today and where we are going. One thing I will pop up here and give you guys a heads up of where we're at in total. So here's where things are. Let me shrink this puppy down and just show you how things are going. So there we go. I got it nice and zoomed in for you guys. So the account balance is up to 6,000 in total, and that's because I just got it prepped and ready for the next 2,000 for next week. So I've got that sitting here ready to invest. Total cost basis in the market, I've invested $3,968, so I'm just shy of the 4,000, pretty close. And on a market value basis, I'm actually down $19. It's been a couple of the sectors have started to come down, so let's talk about that for a second. Hey Sleepy, welcome. Thanks for being the first chatter. Appreciate that. Hopefully you can enjoy a little bit of stock talk and investment talk. How much money do you have? What? Maybe someday I'll disclose more net worth information. Just not today. I want to focus on consistent investing strategies and share my journey with everyone as I go about doing this. I did this a couple years ago, and I had invested somewhere to the tune. I had always had quite a bit in the market, and my buying and selling back during 2021, 2022, I know I surpassed 250,000 in buys and sales, which I learned a lot, and I completely exited the market I'd say a year and a half ago or so. I sold it all, and I didn't want to follow it anymore. I didn't want to invest in it anymore. I had my fun with it, and I stepped away and got more involved in things that are more like guaranteed, like CDs or things of that nature. But now, as interest rates are starting to come back down on those CDs, I'm no longer getting that 5.5% to 6%. Yes, I have a 5.7 CD locked up right now, and I've got numerous in the 5s. As that starts to come off and run off, I'm not interested in CDs that are sub 4%, and I'm not interested in long-term CDs that would require me to get that 4%. So I'm going to start the process of getting back into investing, and the long-term goal is to ultimately have what I would call a dividend fund that produces $80,000 a year. So that's where I'm tracking towards. That's always the goal. I'm going to keep referencing that because that's where I'm moving towards. Because at the 80,000 goal, as soon as I hit that, you'll notice I've got a ticker down here in the bottom right. This is called how close I am to retirement, because as soon as that hits the 100% mark, I am officially retired. You're probably like, that's not even at 1%. I get it. It's going to take a long damn time to get the dividends up to where I need it to be. And so got to start early, got to stay consistent, and keep working it. So back to where I was here with this. And so we're sitting at just under 4,000 in the market. We are down ever so slightly. And if I scroll down here, let's take a look at what's actually driving that loss. So of the $19 down, let's focus on this column right here that we've got. If I look at the bond index, relatively flat. Consumer, I believe this one's consumer discretionary. These are all the ETFs that I'm investing in. So all the things that we were just talking about on the spreadsheet, a little cleaner to look at in the pivot table, but anywho, doing well in consumer discretionary, up 1.5%. Energy is down 2%. That's this one here. The financial market is up 0.6%. One of the big kind of reductions out there is actually the technology sector, so VGT, down 1.5%. This next one, VHT, is the healthcare index fund. That is down 1.5% since I started. VIS, which is industrials, is down 1.6%. Real estate is up 1.5%. VU, which is the S&P 500, call it Spider, it follows suit with that, is down 0.6%. VOX is down 1.6%. VPU, oh, I'm blanking on what this one is again. Let me just try to get back to memory. Utilities, that's what VPU is. 4.8%. Sorry, 2.8%, up $4.80. And then this VSGX is the international index that I'm interested in. It's down 1%. VUG, which is the growth index fund, that one is down 1%. And VYM, which is that dividend type of fund that also follows large cap S&P 500 companies, is down 0.5%. So all in all, this is what this is showing me, a down total of $19 on the 4,000 invested. And we just talked about the shopping list a little bit earlier here of where we're going towards next week, Monday. How am I feeling after the first 2 days or the first 2 weeks of getting involved, and now we're almost encroaching week 3? Not too attached to it at this point. I really got a sound strategy. I like this back when I used to invest a lot and buy and trade a lot, and this to me gives me something to look forward to, something to be interested in. So now one thing I just want to talk about briefly is the investment income. So what's really cool is with this Charles Schwab, I can look at where do I think my dividends are going to come in over the course of the next year. Now this is where I'm talking about how do I get this ultimately to 80,000. So based on everything that's been purchased right now, it looks to me like January, April, July, and October over the next 12 months are the big dividend distributing months at just right around $12 each month. And then we've got $1 in February, $4 in March, and continuing to repeat that process. So what will be really fun is to watch how this grows over time as we continue to pump more and more and more and more into ultimately the account. And long-term wise, super excited to just, I don't know, get back into the game. I love getting into the game here. So for those that are following me on the Slots to Be Frank channel, this was my very first ever channel, was Frank Finance, and used to spend a lot of time talking about finance, investing, purchasing companies, divesting companies, looking at the annual filings of companies, talking about budgets and all sorts of other fun things. And so this really is something that I really enjoy to talk about, and I hope you find interest in this and joy in learning about this. So anywho, that's kind of my my spiel for the night. The only thing that I really had on the list was I wanted to pass along how are we doing, where are we going, kind of give a little update on which index funds have been doing okay, which have maybe been struggling. If I go back to the positions that we were just looking at, maybe if anyone has anything they want to learn about, talk about, feel free, drop it in the chat. Let me know. If you're watching this after the live, thank you first and foremost. Feel free to drop it in the comments, and I'll catch it on the next live that I do. I can try my best to help understand something or pass along why I do what I do in my strategy. But this ultimately is your guys' time to guide where you guys want to go. Otherwise, I think for the next short period of time here, I might take a review at some of the indexes that are doing not as hot and see kind of what we can find in the gory details of why. Oh baby, baby, I want you to know that stock buying is fun, yeah. Okay, quiet crowd tonight. Let's move on. Let's move into the grooving. And just when it hit me, this stock took a shit. I was worried about this one. So when I bought in at $610 per share for the tech ETF, I was like, man, this puppy's gonna take a shit on me. And of course, that's my biggest loss right now. It's literally 50%, over 50%. No, yeah, by 1 penny. It's over 50% of the losses. So let's take a look at this puppy and see what's going on here. Let's see what we can learn. Man. Why am I yawning? Okay, so what do we got? What do we got going on? Today's range dipped as low as 595 and it was as high as 600. 52 week. See, there's the 610. I pretty much bought at the peak. But the 52 week low is just under 400 buckaroos. Morningstar has got a lot of good 5-star ratings on overall 3-year, 5-year, 10-year. Wait, I gotta shrink this puppy up here. There we go. Sorry, there was ratings over on the right. You probably couldn't see it. Don't worry about it. Let's see how she's bounced around here. So for the last month, it looked like early October it did dip below 570, but it was on a little bit of a run. Little dip mid-October. It seems like every about week this puppy's been dipping. So don't really know why yet. Still trying to learn and understand more. Let's see if we can get some notes on this. A little detail about the fund down here. All right. So The top holdings here is Apple, Nvidia, Microsoft. Those guys hold almost 50% of the entire ETF. And a little bit with these semiconductors and application softwares in there as well. It does have a just under a 1% dividend yield. Trend analysis. What's this puppy all about? VGT appears to be consolidating with a long-term uptrend. The average directional index, or ADX, is below 20, indicating that shares have been trading sideways recently. However, the 200-day is still sloping bullish upwards. Comparative resolution. Okay, cool. Momentum for VGT as measured by a 14-period. What the hell? See, these are the things I want to learn as I'm continuing to like read through these, check them out, see what's going on, see if I can make any sense of it. Today's volume was lighter than usual, trading 270,000 shares versus an average of 466,000. So the on balance indicator is bullish. The slope of the indicator is positive, and section buyers are presenting more active than sellers. That's good. That's a good sign. Maybe my largest negative in my portfolio right now will make a run upward. All right. Oh, here's those Morningstar ratings that I was talking about briefly. So, strong, 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 strong. No surpriser here. Historical return above average. It is up there in a good way. Risk is medium. That makes sense. If you're going to have high return, you probably have high risk. What you'll notice is a really strong blend of these. This little grid puppy here, we'll talk about this a lot as we talk through investing in something to just benchmark, understand, be aware of. So when you think about the different types of stocks, you've got large cap, mid cap, and small cap stocks. And then from left to right, you've got value stocks, blended, and then growth stocks. Think of this left side as your cash cows, their valuations on the company, like their PE ratio is probably a little bit lower, meaning that they don't have a lot of room to grow, but they've got no cash flow problem whatsoever. I'll skip the blended and I'll go right to the growth. The growth sector, on the other hand, is the exact opposite. They're not even close to their cap, huge multiples on their for their PE ratios. They more than likely can run into cash flow issues, and people don't know what it's going to become yet, so they invest and invest and invest for that potential of that home run. So think like Tesla. Tesla's going to be up here. Think Costco. Costco's going to be over here. Costco's a cash cow. They have nothing new and innovative that is going to drive them to be a version of a Tesla. Tesla's got an electric car. They've got the charging stations. They've got the auto. What the heck is that called? When the driver basically, like the car drives itself. I mean, there's a lot of things we don't know what Tesla is going to become yet. As an example, or like Apple. Apple is like sitting like right here in this line, in my opinion. I would have to check it to confirm it, but it's like it's teeter-tottering one of these where it's starting to lose its innovational growth, but yet it's still a strong potential to grow. It's not quite a cash cow. It's not quite a far right semiconductor. Who the hell knows what's going to happen? Like NVIDIA, another great example, that is just blown up because as AI technology goes to the moon, you can't do it really without NVIDIA. And so people realize the value in that stock. And yeah, mid cap, small cap stocks, I honestly don't dink around a lot with this. If you were ever to ask me what one of my favorite stocks are, but it's unfortunate that I don't know if it'll ever bounce back, but it used to be one of my favorites was Stitch Fix. I really like their business model. I just don't know if they've got a place in our economy anymore. Man, super cool model, super cool model. I love the idea of shipping new clothes to people. It felt like a strong opportunity for that company to have a nice place in out there, and I feel like the competition and everything else is too high. But I don't. What you're hearing from me is I don't really dink around with these guys. Like I don't know enough about them. Maybe as the portfolio gets bigger and we grow more, what I'd like to see is maybe a little more gambling, if you will, on stocks like, call it the Stitch Fixes of the world, or companies that I think are up and coming in the pharmaceutical world or something like that. What I might do and what I like to do in the past is take my dividends and invest them in these kind of maybe more startup or riskier companies and hope it's the next Lyft, it's the next Uber, it's the next Tesla, whatever, Apple. You can go on and on. Hope you can strike gold on one of those. So later, as I build this portfolio back up, that will be one of the goals later, is to start getting into investing in some more individual stocks. All right, let's keep rolling. Again, this is the grid. It's super important to understand where your stock or ETF sits on that grid. And I'll keep talking about this every time I go live because it's, unless you love this kind of stuff, this is all going to be brand new to you. And so what we talk about next time might not kind of click totally. Anywho, all right, let's see what's been going on with VGT over the time period here. So market price on a 1 year is up 42%, 5 year 23%, 10 year 20% a year, and since inception, which was 2004, it's up 13.5% a year. Obviously, these are not adjusted for inflation. It's pretty cool. Pretty cool. Such strong growth. I mean, our technology is the way of the future. There's so much need for technology long term. As costs become more expensive, companies are going to be forced to implement technology. It's just the way it's gonna work. It's the only way it's gonna work. All right. All right, let's read about the fund strategy. The investment seeks to track the performance of MSCI, U.S. Investable Market Technology 2550. The fund employs an indexing investment approach designed to track the performance of that index, an index made up of stocks large, mid, and small cap with the infotech sector. The advisor attempts to replicate the target index by seeking to invest all of its assets in stocks that make up the index. In order to hold each stock in appropriate approximate the same portion as its weighting and index. It is non-diversified. So you can see it's 100% in the tech fund, and then underneath the tech fund, it's very strong in software, and semiconductors are just a percent behind at 33%, technology at 18%, and then IT services, equipment, and communication equipment are all about a little over 10%. So that's kind of cool. I like how I'm actually pretty impressed overall with Charles Schwab. I really like TD Ameritrade. They were purchased by Charles Schwab, and so I just continued using the same kind of account. So I have history there. Cool. All right. Well, I think what I'm seeing here is the volatility. So based on what we just learned by looking at this index fund, we've noticed that the volatility is starting to slow down based on trends, which has been kind of discussed in this technicals here. And the trade volumes have shrunk. Higher trade volumes normally means a lot more volatility. Based on everything that I've read here on their information, it does look like to me that hopefully this will start getting back on the bullish train, but not a lot of information more than that at this point in here. Maybe in the future what I'll do is I'll go check out some of the top stocks in these trends, or in these segments, and go see how they're doing. So like if Apple, those top 3 stocks, Apple, Nvidia, Microsoft, maybe I'll go take a look at these guys and see how their earnings releases went, and go from there in the future, as I'm trying to get my feet wet and trying to understand more. But all right, guys, Beans, there's no questions in the chat. Thank you for those that have tuned in tonight. I appreciate that. If you haven't, smash that subscribe button if you're brand new. Thanks for tuning in, and I don't have a regular schedule on this yet, but maybe I'll after the purchase on Monday kind of talk about where it is, or do a live over the weekend. I don't know what my plan is at this point, but if you've got something you want to learn about, you got a topic you want to learn about, drop it in the comments below on this video, and I'll try my best to make what I can on it. But till next time, thank you guys for tuning in.